As a former mortgage broker with over 15 years of experience in the industry, I've seen too many homeowners overpay on their mortgages due to hidden costs and avoidable mistakes. In fact, according to the Consumer Financial Protection Bureau, approximately 23% of mortgage applications face delays due to incomplete documentation, and gift letters are among the top culprits. In my experience, one of the most common mistakes people make is providing inadequate gift letters, and this seemingly small oversight can derail your entire home purchase. A gift letter is a legal document that proves the down payment on a home is a gift rather than a loan. This distinction is critical because lenders need to ensure that your down payment represents your own equity and isn't borrowed money that would increase your debt-to-income ratio. It's a crucial part of the mortgage application process, and it's absolutely essential to get it right. Unlike a casual family loan, gift letters have specific regulatory requirements set by the Federal Reserve and enforced by individual lenders to prevent fraud and ensure compliance with lending standards. So what makes a gift letter adequate? Let me break this down into the essential components that underwriters scrutinize. First, the gift letter needs to include the exact date the gift was made. This may seem like a no-brainer, but I've seen countless gift letters missing this crucial piece of information. Underwriters need this date to verify that the gift was received before the official offer acceptance date on your purchase agreement. Without it, they cannot confirm the timeline and may question whether the funds were actually gifted or borrowed for the down payment. I once had a client in Ohio who submitted a gift letter dated 3 weeks after their offer was accepted. This triggered a complete reevaluation of their financial profile. Second, the gift letter needs to include signatures from both the borrower and the donor, along with their printed names and contact information. This ensures that all parties are aware of the gift, understand its terms, and agree that no repayment is expected. Many lenders now require notarized signatures to add an extra layer of authentication. I've encountered situations where a spouse signed the letter but the other spouse didn't, which created confusion about whether the gift truly represented family funds or if there were marital property issues involved. Third, the gift letter needs to include the donor's bank information, account type, and ideally their account number or at least the last 4 digits. This provides proof that the donor has the funds to make the gift and that the gift is not a loan. Some lenders now require the donor's bank routing number and SWIFT code for wire transfers, especially for international gifts. This verification step is absolutely critical. I've seen underwriters reject gift letters where the donor claimed to have $100,000 in savings, but couldn't produce bank statements showing those funds actually existed. Fourth, the letter should include a statement explicitly declaring that no repayment is expected. Language like "I am providing this gift with no expectation of repayment. And this is not a loan" is essential. Some states even have specific statutory language that lenders require. I worked with a client in New York whose gift letter said the donor would eventually appreciate the gesture, which an overly cautious underwriter interpreted as an expectation of future benefit and demanded clarification. In my experience, I've worked with numerous clients who have fallen into the trap of providing inadequate gift letters, only to face significant delays or outright denials. Let me share some specific case studies. Last year, I helped a client who was purchasing a $380,000 home in the Midwest with a 20% down payment, $76,000. The client's gift letter was otherwise complete, but it was missing the donor's bank information entirely. The underwriter flagged this immediately, triggering a 5-day underwriting extension while they requested bank statements. This extension pushed the closing date by a week, which caused a rate lock expiration issue, ultimately adding $1,500 to the closing costs. Additionally, because the extension pushed into a different billing cycle, the property taxes calculation changed slightly, adding another $200 in unexpected fees. Another common mistake people make is not providing enough documentation to support the gift letter. This can include bank statements, tax returns, proof of funds, and other financial documents. The documentation trail is what gives underwriters confidence that the gift is legitimate and that fraud isn't occurring. According to the Mortgage Bankers Association, gift letter fraud has increased 34% in the past 3 years, so lenders are increasingly vigilant about verification. I've seen cases where the donor's bank statements weren't provided, or where they were provided, but only showed a current balance without transaction history. Some underwriters want to see 3 to 6 months of statements to verify that funds weren't recently borrowed. I worked with a client purchasing a $420,000 home in California with a 10% down payment, $42,000. The client's gift letter was complete, but the donor's bank statements weren't provided. The underwriter requested statements, and when they finally arrived, they showed that the donor had only deposited the exact gift amount 3 days before the gift letter was signed. This triggered suspicions of borrowed funds and required a secondary source letter from the donor explaining where the funds came from. This entire back and forth added $3,000 to the closing costs and delayed closing by 2 weeks. In another case, I worked with a client purchasing a $300,000 home in Florida with a 15% down payment, $45,000. The gift letter and donor documentation were complete, but the borrower's personal tax returns were not current. The underwriter needed to verify the borrower's income and employment to assess their ability to repay the mortgage. When the tax returns were 3 months out of date, the underwriter required current pay stubs, employment verification letters, and an updated letter of explanation. This triggered what I call a documentation cascade. One missing piece led to requests for 5 additional documents. This process added $2,000 to the closing costs and extended the timeline by 10 days. So how can you ensure that your gift letter is accurate and complete? Let me walk you through a detailed checklist. First, make sure to include all the necessary information. The date the gift was made, the gift amount in both numbers and written form, for example, $50,000, $50,000. The borrower's and lender's signatures with printed names, the donor's name, relationship to the borrower, and contact information. Include the donor's bank name, account type, and verification that funds are available. Many lenders provide specific gift letter templates that include all required language. Some states, like California, have specific statutory requirements that must be met. Second, provide enough documentation to support the gift letter. This typically includes 2 to 3 months of the donor's bank statements showing the gift funds are available, proof that the funds were deposited, a wire confirmation or deposit slip, and the donor's government-issued identification. If the donor is transferring funds from an investment account or retirement account, provide statements from that institution as well. The underwriter wants a complete audit trail. Third, make sure to review the gift letter carefully before submitting it to the lender. Print it out, read it aloud, and check for typos, grammatical errors, and logical inconsistencies. I once caught a gift letter where the donor claimed to be the borrower's mother, but the surname was completely different from the borrower's name. This led to a 30-minute phone call to clarify whether this was an adoption situation and required additional documentation. Small details matter tremendously in the mortgage underwriting process. Fourth, ensure that all signatures are original, not photocopied or electronically signed, unless the lender specifically allows e-signatures. Some lenders still require notarized signatures. Have the donor and borrower both sign and date the document. If either party is married, confirm whether the non-signing spouse needs to sign as well. This varies by state. In my experience, I've found that it's essential to work with a reputable lender who has experience with gift letters. They can guide you through the process and ensure that your gift letter is accurate and complete. Experienced lenders have seen every variation of gift letter issues and can proactively address potential problems. For instance, many lenders offer gift letter templates that can help you get started. These templates can provide a framework for your gift letter and ensure that you include all the necessary information. Using these templates is like having a professional checklist. They've been reviewed by legal and compliance teams and are known to satisfy underwriting requirements. Some lenders even offer mobile-friendly versions that borrowers and donors can sign electronically, with secure storage and automatic transmission to the underwriting team. Additionally, some lenders offer gift letter review services, which can help you catch any mistakes or omissions before submitting the gift letter to the underwriter. This pre-submission review is invaluable. I've seen lenders charge $150, $300 for this service, but it often prevents $2,000, $5,000 in underwriting delays and extensions. Think of it as preventive maintenance for your mortgage application. By working with a reputable lender and following these tips, you can ensure that your gift letter is accurate and complete, and avoid any potential delays or denials. Now, let's talk about the financial impact of gift letters on mortgage rates and closing costs. According to the latest data from the Federal Reserve, current mortgage rates range from approximately 6.8% for a 30-year fixed-rate loan to 6.1% for a 15-year fixed-rate loan. However, if you're not careful, a vague or incomplete gift letter can trigger an underwriting extension, which can add thousands of dollars to the closing costs. Here's the mathematics. If you're purchasing a $420,000 home with a 20% down payment $84,000, and your mortgage amount is $336,000, a 1% increase in the mortgage rate can add approximately $2,100 to the total closing costs, plus an additional $2,016 per year to your mortgage payment. Similarly, if you're purchasing a $300,000 home with a 10% down payment $30,000, and your mortgage amount is $270,000, a 1% increase in the mortgage rate can add $1,620 to closing costs. Furthermore, if you're not careful, an incomplete gift letter can also trigger PMI, private mortgage insurance thresholds. PMI is required when your down payment is less than 20%. If an underwriting extension causes delays that push your closing past a rate lock expiration date, your rate could increase, which might push you below an 80% LTV loan-to-value ratio threshold, changing your PMI requirements. For example, if you're purchasing a $420,000 home with a 10% down payment, you're borrowing $378,000. At this LTV ratio, you may be required to pay PMI, which can add 0.5% to 1.5% to your mortgage rate depending on your credit score and down payment percentage. This can add $1,890, $5,670 annually to your mortgage payment, and increase the total closing costs by $3,000.8,000. In my experience, I've found that it's essential to work with a reputable lender who can guide you through the process and ensure that your gift letter is accurate and complete. By doing so, you can avoid any potential delays or denials and ensure that you get the best possible mortgage rate and terms. So, what are the key takeaways from this video? First, it's essential to provide an accurate and complete gift letter that includes all the necessary information. The date the gift was made, the borrower's and donor's signatures with printed names, the donor's bank information, and a clear statement that no repayment is expected. Second, it's essential to provide enough documentation to support the gift letter. This includes bank statements, typically 2 to 3 months, proof of funds transfer, government-issued identification, and any other documentation the lender requests. Don't wait for the underwriter to ask, provide everything proactively. Third, it's essential to review the gift letter carefully before submitting it to the lender. Check for typos, grammatical errors, and logical inconsistencies. Have all parties review it to ensure accuracy. Fourth, work with a reputable lender who has experience with gift letters and can offer pre-submission review services. This small investment can save thousands of dollars in underwriting delays and extensions. By following these tips, you can ensure that your gift letter is accurate and complete, avoid any potential delays or denials, and protect yourself from unnecessary costs. Remember, the mortgage process is full of hidden pitfalls and opportunities for costly mistakes.